Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Customers Bancorp. And let me tell you, there are some interesting personnel moves happening that might just make you question who's really in charge. Are they shuffling the deck to sail in smoother waters, or is there more to this change-up than meets the eye? This report is all about changes at the top, specifically a shift in the Chief Financial Officer role and the arrival of a new executive. We'll break down who's going where, why it matters, and what kind of payday the new CFO can expect. Think of it as a corporate game of musical chairs, but with potentially bigger stakes than just a comfy seat. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss corporate filings with other experts. The earliest event reported happened on May 28, 2025. So let's jump into what this report is all about. Philip Watkins, who is currently the Executive Vice President and Chief Financial Officer, will transition to a new role. He will become the Executive Vice President, Head of Corporate Development and Investor Relations. This move is expected to happen around August 15, 2025. The reason for this change is that Watkins will now focus on leading strategic projects to help the company grow in the long term. Mark McCollum has been appointed as the new Executive Vice President, Chief Financial Officer of Customers Bank, which is owned entirely by Customers Bancorp. McCollum started his role on June 2, 2020, 2025. McCollum, who is 61 years old, has a lot of experience in finance, strategy, and operations, more than 35 years to be exact. Before this, he was the Chief Financial Officer of Fulton Financial Corporation, a large financial holding company with $30 billion from 2017 to 2020-2024. Before that, he worked in senior management at Griffin Financial Group, an investment banking and financial advisory firm, for 9 years. He also served as the Chief Financial Officer of Sovereign Bancorp from 1996 to 2008. Customers Bancorp and McCollum have agreed on an employment contract which includes several terms. The initial contract lasts for 2 years. It will continue unless either McCollum or the company decides to end it with proper notice. According to the contract, McCollum will receive a few things. First, he'll get a base salary of $500,000 each year. He's also eligible for a short-term incentive or STI for 2025. The target is 70% of his yearly base salary. This will be paid in a combination of cash and restricted stock units or RSUs. These RSUs will typically vest or become fully owned in 3 equal annual installments. The payments will be based on how well he performs as decided by the company's Leadership Development and Compensation Committee, or LD&CC. There's also a long-term incentive or LTI for 2025. This target is 100% of his yearly base salary. It will be awarded entirely in the form of RSUs. Of this award, 40% will vest in 3 equal annual installments and the remaining 60% will vest completely after 3 years. Again, this is based on performance-based criteria approved by the LD&CC. McCollum will also participate in the company's health, welfare, and other benefit programs, similar to what other executives receive. Additionally, he has certain rights to indemnification, meaning the company will protect him from certain liabilities under the employment agreement. McCollum will receive severance compensation, which is money and benefits paid after leaving a job if he ends his employment for what's called good reason, as defined in the employment agreement. He'll also get severance if the company ends his employment for any reason other than cause, which is also defined in the agreement during his employment term. If a change in control, which means a significant change in the company's ownership or control, hasn't happened within 24 months before his termination, then several things will occur. First, he'll receive the sum of his current yearly base salary for the time remaining in his employment term. This will be paid in equal installments on his normal pay dates with the usual tax deductions and withholding. Second, any unvested equity awards, which are stock options or shares that haven't fully transferred to him, will continue to vest on the normal schedule. Third, he'll be entitled to a portion of any annual performance bonus that he would have received for the current year if he had remained employed through the payment date. Finally, the company will continue to provide health insurance, including dental if applicable, and any life or disability insurance benefits. This will last for the shorter of either the period covered by his cash severance compensation or the maximum period allowed to extend his benefits under the applicable plan, policy, or law. Now, if a change in control has occurred within 24 months before his termination, and McCollum is terminated by the company for a reason other than cause within the change in control period, or if McCollum ends his employment with the company for good reason within 1 year after the date of a change in control, and he complies with the terms of the employment agreement, then different rules apply. First, he'll receive cash equal to 200% of the highest rate of base annual salary that was payable to him at any time during the 12-month period ending on the date of his termination. Second, he'll receive cash equal to 200% of the average of the annual performance bonuses he earned during each of the 3 most recent fiscal years of the company that ended before his termination date. Third, any unvested equity awards he has received will vest in full, meaning he'll get full ownership of them immediately. However, if McCollum is terminated by the company for a reason other than cause within the 2nd year after the date of a change in control, the severance calculation in the first 2 items mentioned above will be reduced from 200% to 100% to 100%. If, as a result of the payments made according to the employment agreement, along with all other compensation payments provided to McCollum under any other plans or agreements in connection with a change in control, McCollum becomes subject to excise taxes under Section 4999 of the Internal Revenue Code of 1986. The amount of severance paid will be reduced to the maximum amount allowable without causing him to be subject to those excise taxes under Section 4999 of the Internal Revenue Code of 1986. The amount of severance paid will be reduced to the maximum amount allowable, without causing him to be subject to those excise taxes. The employment agreement also includes certain restrictive covenants. These prevent McCollum from soliciting or trying to get business from certain customers, clients, executives, board members, employees, or vendors of the company during his employment and for 12 months after he leaves. The agreement also contains confidentiality, non-disclosure, and assignment obligations regarding the company's proprietary information, which is defined in the agreement. The company will file an amendment to this report to report the execution of the employment agreement. There are no existing arrangements or understandings that led to McCollum being appointed as an officer, and there are no family relationships between McCollum and any of the company's officers or directors. Also, there are no related party transactions that need to be reported. So what does all this mean? Customers Bancorp is making some significant changes in its leadership. Philip Watkins, the current CFO, is moving to a role focused on corporate development and investor relations, which suggests the company is prioritizing long-term growth strategies and wants someone dedicated to that effort. Bringing in Mark McCollum as the new CFO is a strategic move, given his extensive experience in the financial sector, including his previous roles at Fulton Financial Corporation and Sovereign Bancorp. His experience could bring a fresh perspective and stability to the financial management of Customers Bancorp. The employment agreement with McCollum is pretty standard for an executive level position. The base salary, short-term and long-term incentives, and benefits package are designed to attract and retain top talent. The severance terms, especially those related to a change in control, are there to protect McCollum in case of a merger or acquisition. The restrictive covenants like the non-solicitation clause are common in executive employment agreements to protect the company's interests and prevent key employees from taking valuable relationships or information to competitors. Overall, these changes seem aimed at strengthening the company's financial management and strategic planning. Whether they will be successful remains to be seen, but the moves indicate that Customers Bancorp is serious about its growth and stability. Alright, that's our breakdown of Customers Bancorp's latest filing. What's your take on these executive moves and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.